valuations.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled Global Game of Chicken. Well, it looks like the cars are speeding up. Like a scene from a James Dean movie, the global game of chicken that has been taking place between the United States and China and the rest of the world is starting to heat up. Just yesterday, an article from the UK Independent came out by a credible author who claimed that secret meetings have been taking place to effectively end the US dollar as the currency of choice for oil trading, thereby weakening its position as the world's global reserve currency. Now, while nobody is happy about the decline in the value of the US dollar, this is nothing new. Okay, I wrote about this back in June in an article, and since that time nothing has changed, except for that the value of the dollar has declined even further, and the opposition has gotten even louder. Alright, so let's take a look at what needs to happen in order to get us off of this global collision course.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so global accounts need to move back towards parity. Now, what do I mean by that? Well, we know here in the U.S. we have a massive deficit, and we're also hearing that China has a massive surplus. Okay, they're sitting on literally trillions of U.S. dollars in their account. So the account balances have gotten out of whack, so to speak. Now, this has happened over the course of many years. We've always had an account deficit with China. I mean, it's just a matter of fact because they have lower labor costs. They're an exporting nation. We're an importing nation, so we import a lot of goods from them. We send a lot of dollars their way. If they don't reinvest those dollars or diversify out of it, then they're going to have a lot of USD on hand. So, that's why the account balance is normally out of whack, but now it's gotten just way out of whack. Okay, and there's a lot of other reasons why this has occurred. All right, now what we're saying is there's no honor amongst thieves. Okay, now the reason I say that is because, there has been some wrongdoing on both parts, meaning on the U.S. and China. Okay, so both parties have acted, I don't want to say in bad faith, but they've done things that have helped contributed to this mess. All right, now the first thing that's happened is that U.S. money printing, okay, and Chinese currency pegs, that's what caused this egregious imbalance. All right, so what's happened is that because we had low interest rates here for a long period of time, there was no money to be made on the cash that was being lent out. So, we had the government lending out a lot of money, caused the housing bubble, caused people to default, the housing prices to go down, things of that nature. Okay, now China, on the other hand, okay, they've had their currency pegged to the U.S. dollar. All right, now that started off that currency peg so that they would be able to become a functioning economy when they started out, but they're no longer an emerging economy. Okay, they're a giant, fully grown economy. Yeah, they still have a lot of work to do, but there's no reason that they should still have this currency peg. Okay, the currency peg basically because our dollar was going down, their dollar was going down. Okay, so that they were able to take advantage of the actions that occurred here in the U.S., and as a result, that left them with a ton of dollars in their account. Well, now they're complaining, well, gee, we have all these dollars, and now you're devaluing the currency, and you know what? They need to get over it, okay? Because, like we say, it takes two to tango. Okay, so I'm not going to absolve either side here and say, well, you guys are more wrong than the other. All right, they just need to fix the problem. Okay, and what that means is getting the account balance back into more parity. All right, now again, this account's never going to be equal based on cultural and economic history. Okay, but once they get the account back to normal ranges, okay, then we're going to be able to move forward with the economy. We don't have to worry about declining dollars, low interest rates, bubbles, things of that nature. Okay, so what the U.S. needs to do to show good faith and to really start, moving this process forward is they need to actually start to raise rates, okay, and accept slower growth prospects. All right, now I know nobody wants to hear that, but basically we're saying you got to take our medicine. We had all this cheap money for so long that created all these bubbles, and now nobody wants the prices to go down and the bubbles to be popped because people are going to be hurt. And they talk about deflation, how that's going to be a problem. Well, the longer they drag this out, okay, the longer it's going to be before we can recover. All right, so the U.S. really needs to have a little gut check here, so to speak, and the politicians need to own up to what they've done over the years, and say, hey, you know what, we had a problem, now we're going to fix it. It's going to be painful, but we're going to get through it, and that's what real leadership's about. The Chinese, on the other hand, they need to allow their currency to float. All right. Now, by some accounts, their currency is undervalued by about 30%. All right. So, if they were to allow their currency to float, they're going to lose 30% of those reserves, basically. All right. That's just going to go back into all the other currencies that the value is going to move over to that side. Okay. What happens in that regard is that once the currency's floating, all right, then it can stabilize. Now they can have it trade in the free market, and they can be subject to macroeconomic tendencies like any other country that's out there. Okay, because as of right now, they've had an unfair and uncompetitive advantage. All right, and that's what's led to this mess. So, they're complaining about the dollar, okay, but yet they're not doing anything about it. Well, you want to get away from the dollar, allow your currency to float. All right, yeah, you're going to take a loss. You know what? Everybody takes losses. It happens. Get over it. Move forward. Okay, so that's what needs to happen to resolve the situation. All right, so don't wait. Get in a course, get educated. Come to www.mywealth.com and learn about how government policies and actions can affect currencies and how they can also affect your investments.
Unless we make these decisions now unconsciously, economic forces will make them for us. The sooner we can get to a bottom, the quicker we can recover. All of the stall tactics are just delaying the inevitable. Because if we continue down this current path, then we're all going to go over the cliff. Okay, and that goes for you too, China. Okay, hey Bernanke, you're no James Dean. Okay, so to learn more about how government policies affect currencies in your investments, be sure to check out our currency trading courses. Okay, so I'm Mike Conlon. Thanks for being with me, and I hope to see you in those courses.